Significant overnight weakness in the four broad market indices. Hello, this is Stephen Harris, a head trader from Falcon Global, where we model best practices for investors, traders, and day traders from entry to exit every trading day. In this daily video, I provide my opinion and insights of current market trends, market timing, volatility, and hedge risk levels for the upcoming day for the key U.S. financial markets. It is 6:39 a.m. Central Time, and I'm recording this in preparation for the market day of May the 12th, 2015. Full disclaimers are at the end of the video, but be aware that this is for educational purposes only, and only you are responsible for the investing or trading decisions that you make. So let's dive in and see just what happened in the overnight. So the S&P is down, I think it's about 17.5 points now, but about 0.75%. The Russell about the same. NASDAQ even more, nearly 0.85%, and the Dow also down about 0.75%. On the flip side, crude oil's up sharply, up about 1.67%. The euro up about 0.86%. And then bonds down again. Bonds got cratered yesterday during the cash market, down 3 standard deviations, and the move continues in the overnight, down about 0.75%. Gold, one of the potential safe havens, was up almost 0.9%. So pretty big shift going on in the overnight action leading into our cash open. In terms of overseas action, China up 1.56%, Hong Kong down over 1%, Japan scratch. Germany, wow, look at this. Germany down almost 2%, United Kingdom down about 1.65%. So pretty significant overnight action. And it's not because of macroeconomic reports. There just wasn't anything, that significant. You did have Great Britain with manufacturing production with the red flag report. There were certainly a couple reports here, but in terms of U.S. macroeconomic reports for today, you have a FOMC member Williams speaking. You have the JOLTS job openings. We know that the Fed pays a lot of attention to that particular report. So there are a couple things on the schedule for today, but really, this isn't any kind of big macroeconomic event coming in today. So fairly stable schedule for today. In terms of the market conditions, from a volatility standpoint, obviously we had weakness, and it really kind of was the worst kind of weakness in that we had it kind of fall during the course of the day yesterday and closed right at the lows of the day. So momentum for yesterday was really quite poor. That being said, nothing compared to what we had in the overnight. The VIX at the close of yesterday, short-term version, was a 13.41, so a little bit of a tick up. But you see the implied IVs, they're still very, very low, 18, 18, 27, and the Dow at 34. In terms of standard deviation moves, we had none yesterday across all the indices. It'd be interesting to see what happens today with this big overnight down, whether we see a continuation pattern or we see a bounce will be obviously the question. In terms of our regular daily report, we continue to see pretty significant warnings in our opinions. Market trend intermediate term phase opinion is a phase 5. We've had the breaking of support levels recently. That's the most recent incident of note, where we had on Thursday the break of diagonal and horizontal support, and we have not established a new high since then. So we still continue with phase 5. IBD status is market in correction, and that's a pretty significant warning there. GMI did improve yesterday to a 5 out of 6 and actually issued a buy signal with yesterday's close. So that was kind of an interesting going the other direction. The market posture is again bearish, and remember we were very cautious yesterday where we had a mildly bullish signal being given, and yet we kind of overrode it, neutralized it, and it would seem that that was the right call. We are right back to a outright bearish market posture. The S&P bearish, NASDAQ bearish. Russell actually flipped to a very weak bull, and the Dow also with a weak bull. So very mixed signals here, but the big one, the S&P, flipping to bearish. Now you could read this as neutral. Certainly that would be fair, but at the very least, what we're looking for with this review is evidence of risk, and we certainly have elevated risk that is not telling us that all is hunky-dory with a long-term or even an intermediate-term bull market. And in terms of that, our hedge warning status continues with a level 2. We've still not changed that in recent days. We have from our volatility warnings, we had market in decline and a sharp increase warning, both triggered with yesterday's action. We still have that daily squeeze on the VIX. We still have the high distribution day count. We still have that crash warning in place, and we still have, from the intermarket risk aversion indicators, the one signal for risk off. Now, albeit the other 4 are still showing risk on. So there are mixed signals here for sure. Not everything is red, but certainly the most important things that we focus on with market posture, IBD status, the volatility sharp increase warning and market decline, the distribution day count, this crash warning indicator. We'd be even more concerned if the rest of these risk aversion indicators were also risk off. There's quite a bit of signals here coming from various systems to tell us that things are not super safe for the initiation of new positions, and that we also need to be concerned about protecting positions and making sure that our risk management is very much in place. Option income strategies. The VIX is inside the acceptable window. Consider the potential for increasing volatility. You have the market and correction situation still. Covered call, cautiously bullish, 1-to-1 distribution between in the money and out of the money. Would not recommend initiating new positions. Just manage ones that you're already in and rolling. Put selling, market and correction conditions are suspect for selling puts. Look for bottoming patterns, and then consider perhaps put credit spreads with defined risk and scaling into any positions that you might want to take. In terms of sector market postures, with yesterday's action, very mixed, and I suspect that unless we have a really sharp bounce, you're going to see a whole lot of red in this come this afternoon's close. We had, as you saw yesterday, pronounced weakness. Look at this, energy down 2%. Utilities, interest rate products continue to be hurt, as you would expect, with the bonds really changing the scene. And I think that'll probably take care of us for today. As always, if you are appreciating what we're doing here, we greatly appreciate you in turn liking us on YouTube and sharing with your trader community about what you have found here. More information about the products that we have, including our portfolio and options trading chat room membership, is available at the website. We do have a number of strategies that we feel very strong about. Our IBD Top 50 ETF strategy, the SPX mortgage strategy, which is an option income strategy, and obviously during better times in the market, we are active swing traders using both options and stocks. Though I would say that at this point, with the hedge risk level 2, we have pretty much shut down swing trading initiation of positions in alignment with that, and glad for that. Performance always matters, and we're very transparent with our performance. There are 2-week free trials available. Disclaimers, as always, hit the pause button if you need more time to review the disclaimers, and we'll look forward to seeing you back here tomorrow morning in our market preview from Falcon Global. Thank you.